It is difficult to predict future market conditions, but in general, there are a few reasons why some people may think that 2023 could be a good time to invest in the stock market. The economic recovery from the impacts of COVID-19 pandemic is expected to continue, which could lead to growth in corporate earnings and an overall increase in stock prices. The interest rates have been low, and this makes the stock market more attractive to investors than bonds, which have less potential for returns. The global vaccination efforts are on the way, which is expected to lead to a decline in the number of COVID-19 cases and a return to more normal economic activity, which could benefit companies and lead to increased stock prices. Other well-known investors have varying opinions on the stock market and its potential for investment in 2023. Some may agree with Ray Dalio's assessment that the market is in a bubble and caution against investing, while others may have a more bullish outlook and see opportunities for growth. Warren Buffett, CEO of Berkshire Hathaway, has been known to be optimistic about the stock market's long-term prospects. He has said that he believes the market is a good place to invest over time, despite the occasional downturns. On the other hand, Howard Marks, founder of Oaktree Capital, has been more cautious and has warned that the market is currently overvalued and that investors should be prepared for a downturn. Similarly, Paul Tudor Jones, founder of Tudor Investment Corporation, has also said that the market is in a bubble, driven by low interest rates and easy monetary policy, and that investors should be prepared for a correction. Some investors have a very positive outlook on the stock market for 2023, citing a few potential reasons for this optimism. Economic recovery. As the world continues to recover from the COVID-19 pandemic, some investors may see potential for growth in corporate earnings and an overall increase in stock prices. Low interest rates. With interest rates remaining low, some investors may see the stock market as a more attractive option than bonds, which have less potential for returns. Fiscal stimulus. The potential for additional fiscal stimulus measures, such as government spending or tax cuts, could also boost economic growth and lead to higher stock prices. Innovation. The rapid technological advancements in various sectors like 5G, AI, and renewable energy is expected to drive the growth of these companies and benefit the overall market. Vaccination. The ongoing global vaccination efforts may help to bring an end to the pandemic and return the economy to more normal activity. This could benefit companies and lead to increased stock prices. Valuations. Some investors may argue that current valuations for stocks, while high in some cases, are still reasonable when considering the low interest rate environment. Earnings growth. Some companies may have reported lower earnings in recent years due to the pandemic, but some investors believe that earnings will rebound as the economy recovers, leading to higher stock prices. Strong fundamentals. Some investors may see strong fundamentals for certain companies or sectors, such as strong balance sheets or high growth potential, which could lead to positive performance in the stock market. Global growth. The global economy is expected to recover and grow, which could benefit companies that do business internationally and drive the stock market. Consumer spending. As the economy recovers, consumer spending is expected to increase, which could benefit companies that sell consumer goods and services. Another point to consider for a positive outlook on the stock market for 2023 is the potential for mergers and acquisitions activity. With companies sitting on large amounts of cash, many of them may look for opportunities to grow through acquisitions or mergers. This could lead to increased valuations for companies involved in mergers and acquisitions activity, as well as for companies in the same sector or industry. Also, the recovery of the global economy, and the increasing availability of capital, could lead to increased investment in infrastructure and other long-term projects. This could benefit companies that provide goods and services to these projects, such as construction and engineering firms. Additionally, the technology sector is also likely to continue to perform well, as the ongoing trend of digitalization and automation is expected to drive demand for technology products and services. Another point to consider for a positive outlook on the stock market for 2023 is the potential for growth in emerging markets. Emerging markets, such as those in Asia, Latin America, and Africa, are expected to see strong economic growth in the coming years. This could lead to increased demand for goods and services from these markets, which could benefit companies that do business in these regions. Additionally, with the ongoing trend of globalization, many companies are expanding their operations to emerging markets, to take advantage of the potential for increased sales and revenue growth. This could also benefit investors in these companies. Another positive outlook could be the potential for green energy and sustainable investments. With increasing awareness and concern about climate change, more and more countries are committing to transitioning to renewable energy sources, which could benefit companies in the renewable energy sector. This could lead to increased demand for products and services related to renewable energy, and could also benefit companies that are taking steps to reduce their environmental impact. However, here are a few potential reasons why some Indian investors may have a positive outlook on the Indian stock market in general. Economic growth. India has a large and growing population, which could lead to increased demand for goods and services and support economic growth. Demographic dividend. India's large youth population could be a source of labor and consumption, which could drive economic growth and benefit companies in the country. Reforms. Government reforms such as GST, and the recent farm reform bills could lead to increased efficiency and growth in the economy, which could benefit companies in the stock market. FDI. India has been taking steps to attract more foreign direct investment in recent years, which could bring in more capital to the country and benefit the stock market. Consumption and rural market. The consumption and rural market in India is expected to grow, and this could benefit companies catering to these sectors. Reforms in the financial sector. The Indian government has been implementing various reforms in the financial sector, such as the Insolvency and Bankruptcy Code, which could lead to increased stability and growth in the sector, and benefit companies in the financial services industry. Infrastructure development. The Indian government has announced various initiatives to develop infrastructure in the country, such as the National Infrastructure Pipeline, which could benefit companies involved in infrastructure development. Digitalization. The increasing trend of digitalization in India could benefit companies involved in the technology sector and e-commerce. Manufacturing. The Indian government has been promoting the Make in India campaign to boost the manufacturing sector, which could lead to increased demand for goods and services, and benefit companies in the manufacturing sector. Startup ecosystem. India has a strong startup ecosystem, and the Indian government has been taking various steps to promote startups, which could lead to innovative business models and new growth opportunities. It's important to keep in mind that these are just a few examples, and that the market is complex and hard to predict. It's always wise to conduct your own research and consult with a financial advisor before making any investment decisions. Additionally, it's important to have a well-diversified portfolio and be prepared for potential market volatility. Thank you for watching this video. Please subscribe the channel for more updates.